Good afternoon, this is Sean Golding with Golding & Golding here to discuss one of the more common international reporting forms, Form 8938. Form 8938 may be required by individuals, corporations, other entities, trusts, estates, but for purposes of this introduction, we're just going to focus on individuals who are U.S. persons. Individuals who are U.S. persons generally includes U.S. citizens, legal permanent residents, aka green card holders, or foreign nationals who meet the substantial presence test. Now, you don't have to be a visa holder to meet the substantial presence test, but generally you are. Common ones we see often is the B1, B2 tourist travel visa, E2, E3, L1, H1B, O1, EB5 investment visa. Any of these visas, if you meet the substantial presence test, you have to file a tax return. If you meet the threshold requirements, you'd have to file an 8938. Unlike many of the other international reporting forms, the 8938 is only due if you have to file a tax return. So let's say you received a foreign gift, Form 3520, you have a foreign trust or foreign corporation, Form 3520A as an Apple, or 5471, you have to file those forms irrespective of whether you have to file a tax return in the current year. That's not the same for the 8938. The 8938 is only required if you have to file a tax return that year. So it's not independently required. That's very important. We've had clients come to us who filed a tax return solely because they wanted to report the 8938, and generally that's not necessary. Unlike the FBAR, which has a single threshold requirement, the threshold requirement for the 8938 is much different. It varies based on whether the person is a U.S. resident or foreign resident or non-U.S. resident, and how they are filing. So when someone is a U.S. resident and they're single, they file the form if they have more than $50,000 on the last day of the year, or if they had less than $50,000, more than $75,000 on any day of the year, they still file it. The same is true for married filing separate. Married filing joint, those numbers are doubled. So it's $100,000 on the last day of the year. If it's less than $100,000, but more than $150,000 any day of the year, you still file it. So let me give you an example. Let's say a single person has $45,000 in specified foreign financial assets on December 31st. You would think they don't have to file the form, but at some time during the year, maybe they sold their foreign residence, investment property, they have their bank account, or they got hit with a $300,000 amount. Unless that bank account is excluded as a foreign financial asset for reporting, then that would also be included on the 8938, even though the December 31st value was under $50,000. Reportable assets are expansive. It's not just a bank account or stock certificate. Investment funds, life insurance, investment accounts, foreign retirement or pension, foreign life insurance, if I hadn't said that already. These are all reportable assets, and they may be reported different on the form depending. There's a section where you identify the account, whether it's custodial deposit, or if it's a different type of asset, you have to go into a little more detail by category, such as foreign retirement plans or pension plans and stock certificates, things of that nature. What happens if you don't file the form? If you don't file the form, you can get hit with an initial $10,000 penalty. But there's a continuing failure to file if it's 90 days from when you were supposed to file and you don't file, and then 30 days thereafter. So you're looking up to $50,000 for the continuing failure to file penalty, in addition to the initial $10,000 penalty. So what do you do if you didn't file the form timely and you want to get into compliance? Well, there's various amnesty programs that are available depending on what your mind state was at the time. Did you know you were supposed to report but you didn't? Did you never hear of this ridiculous form? Some of the more common programs are the traditional voluntary disclosure program. There used to be something called OVDP. They got rid of OVDP, but they did expand the traditional voluntary disclosure program. So if you have offshore accounts and you can't qualify as non-willful, you can still go the traditional voluntary disclosure route and disclose your accounts, assets, investments, and income. Two of the very common programs you hear about often are the Streamlined Domestic Offshore Procedures, Streamlined Foreign Offshore Procedures. They both fall under the main category, Streamlined Filing Compliance Procedures. The Streamlined Foreign Procedures has a penalty waiver. You could file original returns, but you have to qualify as a foreign resident. Streamlined Domestic, you can't file original returns, and there's a 5% penalty. For both programs, you have to be non-willful. We have separate presentations dedicated to each program to give you a better understanding of how to qualify. In addition, there's alternatives to both of those programs. There's something called the Delinquent International Information Return Submission Procedures, DIR-RSP. There's a Delinquent FBAR Submission Procedures, and there's always reasonable cause. This is an introduction to the 8938. It's very expansive. So if you go to our website, goldinglawyers.com, we have lots of information detailing the different thresholds, filing requirements, penalties, comparing it to the FBAR. In addition, we have a sister website, IRS Streamlined dedicated solely to the Streamlined Procedures to give you as much information about that program as we can. Again, my name is Sean Golding with Golding & Golding. Thank you very much for your time. Enjoy the rest of your day.